So, hello, and a massive hello to everybody. Hope we're all having a great weekend wherever you are, whatever you may be doing. This is 50 pips, rocking and rolling. 28th of April, 2019. No trade calls, recommendations, or response for their own stuff here for educational purpose only. So, what's going on? Going into an interesting week, plenty of data, right? We've got basically, we're going to have the BOE on deck. We've got FOMC on deck with a press conference. We're going to have non-farm payrolls at the end of the week. We've got China PMIs, CAD GDP, data of Australia and New Zealand with the jobs number. So there's plenty of stuff going on the data front. And this is also the week we've been waiting for because we've got Google announcing earnings after the bell on Monday and Apple on Tuesday, right? So a lot of interesting things going on. And as we go into this week, you'll start to hear a lot of people talk about sell in May and go away, et cetera, et cetera. What is that referring to? Well, again, it's referring to, the end of the best 6 months of the year kind of cycle and us moving into, what is seasonally, right? You can see here May, June, July, August, September, seasonally weaker period for equities, right? Now, remember, a lot of people, sell in May, go away does not mean sell the 1st of May, right? It's just, usually it tends to be more towards the back end of the month, but really what it points to is the start of this seasonally weaker period. That's the most interesting thing to keep in mind. Now, what will we be focusing going into this week? Well, I think that there are a lot of interesting things going on. Now, even though markets are pressing new highs and they're staying very bid in terms of, ES and NASDAQ, etc., you are seeing some things which are not so healthy, right? You're seeing some, we've seen those aggressive gap downs on Exxon, NVIDIA, Intel, 3M getting killed, right? Caterpillar. So it's not all rosy across the board. And also we talked about last week about, healthcare and real estate. But essentially what we have to focus on is that as long as markets are staying bid, right? For those of you who are trading futures more actively, as long as NASDAQ is making new highs, as long as ES is holding bid, there is little edge in wanting to stubbornly stay short. There's little edge in stubbornly trying to sell strength. These are the kind of markets where you need to be aware of what's going on, and there may be signs that are pointing to some pockets of weakness across the board, lower liquidity, these low liquidity ramps, these ramps, all these gains that are coming in the overnight sessions, etc. But as we know, it can continue to do so for years, right? So you can't just be blindly selling into it, but understanding what the context is, understanding that we're also going into this weaker seasonal period means that, okay, if something sets up and we see some weakness coming in, then it's probably a very good idea to try and take advantage of that and press aggressively, but, not selling into strength. Now, ES, what does that mean? Well, to us, that means very simply that as long as we're holding above this breakup zone, it looks like the path of least resistance is to clear these highs, and maybe if we fail, we'll have to fail from a higher level. But the only place where we'd want to be more aggressively short is if we fail to hold above the pivotal level, above those highs from Jan-Feb last year. If not, this is still holding strong, right? Russell, what's going on the Russell? Russell, we're still hovering at this 1600, and we said as long as we don't get a daily close above, we're more than happy to tactically trade shorts here. But the way this is trading is it looks like it wants to break. So again, tight plays, intraday into the opens, trying to see if you get some traction. But as long as it holds below this, then we can try and stay short and be tactical. We get a daily close above, then 1650 is likely going to come very, very quickly, right? NASDAQ, there's really no point in being stubborn on the NASDAQ here. You got to let it do what it needs to do. We did have this negative close, and I know a lot of people have been shorting this. This almost feels like it's a little bit too good to be true. I have no problem trying to be a little bit tactically short above this low, but again, I'd much rather get short if we trade back below the 77.28s. I'd like to see a little bit more weakness, right? And keep in mind that the way this is trading, this is very, very, very bid, right? So, this could even correct huge and still stay very, very strong, right? And so, it's just look for a healthy market. Don't get caught up in talking about end of the world stuff, right? Clearly things could be ugly. People talking about record short positions on the VIX. That highlights the fact that we could have some kind of VIX event like we had last year, liquidity squeeze like we had last year. But again, you can't bet on those. Okay, so going through these major markets, the other interesting thing here is crude. We talked about how important action was about the 65, and this is a good example of what we've been talking about on equities, right? We said as long as this is holding above the 65 mark, we don't see any edge in trying to stay short or try to short into strength. But if it breaks back below, that's when you want to get aggressive, right? That's kind of like that high from last January on the ES. And you see it can hold around here. There may be short opportunities, but where does it accelerate? Once it loses the key level. And what most people are going to be pointing to here is the fact that we had this very ugly weekly close. Remember, this is the 62.50. We've been talking about this level for a long time, right? So being a level where we've been active for a long time, even when we traded here both to the long side and the short side back to the short side. So here I suspect everybody's going to be coming into the week saying, that's it, we're puking. It almost looks like it's too good to be true, right? But the technicals here say that as long as we don't take out these highs and as long as we close below the 62.50, we should see a decent retracement, possibly all the way back into the 55. Now, a lot, I suspect, will have to do with the news flow, right? So my level to watch would be here, the 55 to the downside for either the bounce back to complete into the descending trend line again at the 70, or if we lose the 55 from a day close basis, then I would expect the next $10 to the downside to come very, very quickly. ZBs, as we've been discussing, it really looks like they're basing and they're waiting to launch here. As we said here, any move back down for us would have been a buy to try and play for this move. So we'll have to see how this trades. It's just stuck at this pivotal level, but as long as these lows hold, we'd be looking for this to grind higher. GC holding the support zone. And remember, we discussed how this was a really important area and that we'd had to see how the market behaved here. And it's holding. And I think what's been the real tell, and we've been talking about it on Twitter too this week and some of the other videos that we put out, is just you have to pay attention to the metals intraday, right? Where they've been getting smacked down every single day on the fixes. Last week was very, very different. And for us, that was the key tell, right? You see the whole week. And then even on the data print, bam, right back up. You really have to pay attention to this. If this can get traction, this could really, really move hard, right? And also keeping in mind how the dollar has been trading, gold and silver have been holding up remarkably well. Okay, 1300 remains the pivotal level here. And in terms of DXY, again, we're going to sound like a broken record, but we've talked about this a lot. And our base case has been the same thing, that if you get a day close, a weekly close back above that 98, it could easily squeeze all the way higher through the 100s and it could be ugly. But here it just looks like it doesn't want to get traction, right? It looks like it doesn't want to get traction. So we'll have to see what happens this week. Again, and it doesn't mean it has to die, but in the same way, we'll look at it as the euro. As you're getting this kind of healthy-ish move, this could easily pull back to continue the move higher, right? We still feel that the higher dollar is gonna, if it gets traction, is gonna cause all kinds of of damage to the upside, and we don't think it's anybody's real interest to see a very, very strong dollar. So we're a little bit skeptical that it could really gain sustained traction. We'll have to wait and see, but the level to watch here going into the week remains that 98 level, right? 98. As long as we're really hovering inside 98, 96, it's just much to do about nothing. And if you see the opposite side to the story, it's the same thing that we've been discussing on the euro, right? And you see how we expected that 1197 to hold the first time. It held, and then it just completely broke. But you see our discussions being the same thing. Look at the dollar, right? That on the healthy move, you play for the bounce, right? So now this is just trend corrected, and you see it's just the shorts are firmly in control, right? Continues making lower highs. So here, going into the week, what we'd be looking for once again is a corrective bounce for this to continue to move in a healthy manner. Again, we're not in the business of playing for markets to move in one direction. So here our base case is that the market is going to try and hold, bounce towards that 113, and the shorts have to keep the pressure on to keep this going down. And if at any point the shorts can't hold it below the 113, we'd expect a very, very quick squeeze higher. Keep in mind, everybody is short the euro. Everybody, their hamster, their pet goldfish, everybody short the euro. So if this starts to squeeze, it could get a little bit ugly, but for now, it's still moving in trend. So clearly, we would not be getting short here, but we'd be looking for a bounce. For us, the short is higher or the longs are here, but we're just continuing to look for the healthy move, but keeping in mind that market is very, very short euro. Now, the other thing to keep in mind, and we discussed that in detail in the video, is to keep an eye here on the yen, on the lower liquidity here, as yen's on holiday, as Japan's on holiday until the 7th. So right now, our base case remains the same, right? As long as we don't get traction above the 112, we're still looking for this to press lower. If anybody wants an updated video on the trade management, send me an email, I'll do it. But again, we're still holding this for 111 and 110. We got very aggressive once you got this, that move there into the roll and the failure to hold. And right now, it looks like it's working, right? Because you've got this move back down, bounced, and once again, the 112 did what it had to do. You got sellers there, right? So we're still in play for that move. Aussie, what's going on Aussie? No big change on Aussie as far as we're concerned. We still expect this to break lower and to take out these lows this year. We traded last week in the room on Friday too, towards the back end of the week for longs into this zone. As we said, we never expect the market to go from A to B in a straight line. So here we had a very nice move into previous resistance. And what we were looking for here was daily closes for an opportunity to hold this level and play a counter trend rally. This could easily move back into the 50 back of the move from A to B, but we would still be sellers for this to continue to move lower in terms of bigger picture view. And similar action on Kiwi. You see it bounce right at this level. Aggressive traders got a chance to get long on that positive daily close for a counter trend rally here, but we much preferred the Aussie because it looks much nicer, was a nice cleaner level. That's pretty much where we are. Cable, we expected this to come right back into the 128. It's trying to get there. We'll have to see what's going on. Basically, it's still holding these shorts off the 132 for the move back to the 130, 128. That's still in play. We'll have to see how this plays out. But again, there's some ugly stuff out there. 3M. This is not pretty, right? The other thing, which is absolutely, which is really doesn't bode very well, Intel. Very, very ugly. Very hard for it to recover off this. Look at this. Very, very ugly action. If you look at the semis in general, island top here, any rally should get sold for a continuation lower. So there are a lot of moving parts, but the problem is, again, it was free money Friday as usual. And then you've got, we're going into Apple and Google, right? So everybody's going to want to be long for free money Apple and Google earnings. We'll have to wait and see. But the way this is trading, this really looks like we're getting closer and closer to some kind of liquidity event, some kind of decent correction. The seasonals also would play in front of that. But as always, there is very little edge in blindly shorting strength. New highs, new all-time highs are bullish. All the bears in the world would want to, they'll find all kinds of charts, they'll redraw all kinds of things, but the action is bullish, right? The fact that it's suspect, the fact that it's happening in the overnight sessions, the way it's trading during the day, it feels very suspicious. The volumes are sure. But as long as it prints new highs, it's printing new highs. So it's a kind of market where if you want to get short, it's much better to wait for weakness to come in. And there are far better ways to spend your day. Guys, hope this was useful. Have an awesome one. Talk to you guys soon. Take care. Bye-bye.